Hello everybody and welcome back to another video. It's just been a couple of days of small selling and all of a sudden we have articles being written such as bigged up days are gone and the corrections are hitting half of the SP 500. How real is this? We'll be taking a look into our thoughts for the week ahead and coming months for the SP 500, Nasdaq, Bitcoin, Tesla, Apple, AMC and more in this video. It's Spooky Friday coming up, and you know what that means? Quadruple witching hour event. So much to discuss. It's going to be a great one. Stay tuned, guys. Okay, guys. Well, the best place for us to start when taking a look at the markets for the week ahead is having a look at the close for the 10th of September, getting a bit of an understanding of what Wall Street were doing into the key close levels. And we did see some big breaks that we're going to be discussing throughout today's video, including our options discussion of what nasty Wall Street seems to be doing right now. We're taking a look at Apple here. Obviously, Apple moved down 3.31% off the back of the App Store ruling. And on top of that, when we go over to the 1 week, you'll notice it actually wasn't that great across the board for quite a few sectors. Healthcare down pretty heavily. Apple obviously showing 3.05% down. And even Microsoft, the stock that can do no wrong, was down 1.81%. Banks also in the decline. And that's important because generally any correction has banks coming with it. Banks tend to do quite weakly into any kind of correction or any little pullback. Let's have a look here at the fear and greed index. Obviously, it is now fearful as it was greedy only a few days ago. We scroll through some of the key factors. Obviously, put call options is an important one. If you want to know when you start to think about getting into markets again, let's say we did have a bigger corrective dip. Generally speaking, when a huge amount of puts get entered into markets, that's when you want to really be thinking about taking that reversal trade. Remember, it's like Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. So if we do see a deeper correction, watch things like this. Obviously, the 0.4 reading was a great level to get very excited. Now, why to get down here? It was all about the election, of course, in the US and things like that. But yeah, interesting points, and it's something to consider when you're taking a look at technical analysis and just thinking about the logical conclusion. Remember, it's Wall Street's best option to, of course, expire 70% of all options worthless. That's the thing. That's the stat. If we know that's the stat, then if everybody's doing something, we probably don't want to be doing it as much, yeah? Let's move over here to what happened during the market day on Friday. You'll notice it did decline early in the morning. Small lunchtime kind of rally followed by the close sell-off. And of course, it's the close is the key. This is where Wall Street is. This is where us, the retail traders, tend to be. Where we really should be is actually over here, making better, more informed decisions when we see the session close. And then, of course, hopefully taking advantage of the next gap open or gap down or gap up or whatever it's going to be on our favorite stocks. If we have a look at the sectors, agricultural did the best. That's Moo. Makes sense. Agriculture is always a very, very good sector to be in. Obviously, food is a big growth sector, I think, over the next decade to 2 decades. Then we have XLU. Now, surprising, this was actually down the most. This tends to be a bit of a defensive sector. It was sold off. XLP, the other defensive sector, consumer staples, about 0.43%. And of course, tech and healthcare leading the way really on the bigger declines there. If we have a look at the actual stock market as a whole, though, guys, this is where things get interesting. The VIX, the VIXy VIX, many people know it as the fear index. This is the daily, and what you'll notice is we've been talking about this on the channel a lot. We obviously have been continuously talking about buying the 16 zone. Underneath 16, the VIX tends to spike. It's actually been a pretty good trade. We've explained it several times on this channel. If you're interested in finding out more about those things, remember to subscribe and smash that like button if you enjoy the videos, guys. But we are now above 20. So anything above 20 is considered a fearful market. That is where the bears start to consider to get a little bit more control. I think the more important factor, though, is that we actually got a close above the 20 on the weekly candle. Now, we have not had this in quite some time, and we know the VIX is usually short-lived, so it goes up quickly and then comes back down. But this weekly 20 plus close is really interesting coming into of course, what is going to be Spooky Friday, the quadruple witching hour. We'll discuss that in just a second. But I did want to bring it up because above 20 is usually where the market is going more bearish, more fearful. Usually we crack past an important level, which we have done on the SPY at the moment, the SP 500, and we tend to move to the next important support zone. So we will be talking about that and the stats behind these types of things. So a lot of people probably don't know what quadruple witching hour event is. And quadruple witching hour event refers to the date at which the stock index futures, stock index options, stock options, and single stock futures expire simultaneously. So the most important thing is here, all of the options, everything's expiring at the same time, which creates that extended period of volatility. Of course, that's why we were so bullish as well, the VIX, because if you're going to get quadruple witching hour in only a few weeks, what tends to spike into that event, especially if it's low? You've got it. You guys answered it, the volatility. And of course, that's why the VIX has been up. Let's move over to the SPY because we have some great options discussion to have here, plus our technical levels. So here's a massive trend line that a lot of people are drawing, and I totally get it. Trend line from the lows here, going through, of course, all the most recent rallies, etc. And we're really putting huge pressure on that as of the Friday close. If the market is going to find this bullish momentum, it kind of needs to find it here or this blue line, which is the 50 exponential moving average. So let's just quickly scroll in here and we'll get into all the other stocks and other indices a little bit later, but there's a lot of options to discuss here. So firstly, we're through the 20 exponential moving average. That is this point here, this red line that comes through. Now we know we've had a tendency once we've broken this line to go towards the 50. So if you're wondering where the 50 is this week, it's around that 441, 440 level. It's also the bottom of the Bollinger, which means, of course, if the market comes crashing down, what generally happens, it hits that Bollinger, tends to bounce, tests something from the support to the resistance side up. Obviously, we'll find out what that might be. It could be this trend line coming up here. We'll talk more in a second about this. And then it could move back down. So just remember, it's usually 2 steps down, 1 step up, 2 steps down, 1 step up if the market is going to be bearish. It could very easily bull here. We know this market is incredibly bullish from a general sentiment. Is the trend still up? Absolutely. Have we broken any of the significant things that we've seen reoccurring? Absolutely not. Look at this 50 exponential moving average. 1, 2, 3, 4, 5, and possibly a 6th time whereby the dip has certainly been the better strategy. 440, 441, it's going to be an interesting level that we need to watch. Now, why is 440 and 441 an interesting level? Well, let's think about the options actually expiring here for the week of the 17th of September. This is, of course, the quadruple witching event. Take a look at this. These green lines represent all the big call strikes. So this is where all the retail herd has been incredibly excited about going bullish SPY. People have been buying options across the board on tons of stocks. People have said that the market will never correct or never crash or never go down more than 2%. I've seen some people saying every 1% is the best buying deal ever. That usually has me a little, it's like elevator talk. It's a little bit worrying. Remember, if you ever get into the elevator and someone's talking about one of your favorite stocks, that's probably a time when you need to be thinking, well, maybe I need to scale a little bit out of this stock because it's that one time. It's the elevator theory, guys. So here's all the calls. That's where they are. Where do the puts start coming in? What we call put walls. So these are put walls. Well, they start coming around that 441, 440. And we can very easily check this by just using a free resource such as Yahoo Options. Not a bad one. Or, of course, you can use our 7-day free trial down below if you want access to things like I just showed you in our FX Evolution private community, free 7-day trial if you're interested. But let's go through these puts expiring here. So let's have a look at all these strikes. So these are the major strikes expiring the 17th. And when we're scrolling through, we'll go back up here, you'll notice that we have a huge amount at different levels. So, of course, we've got a huge amount right around strike right now, 50,000, 20,000, 40,000, all open interest. And then we scroll through and we find some interesting points. 430, 74,000 here. But look at the amount of options that got put in on the 440 here. 42,536, open interest 84,000 at the 440. Right around that very important level that we were discussing, that 441, 440 zone. Will this create the put wall that we're looking for this week, I would be very interested in considering this strike. Basically, what you're looking for is more and more and more and more puts to be put on that level. Because if it does happen, what generally does occur is the Wall Street doesn't want to pay off a lot of that, so they will hold it at that level until the expiry occurs. This could be a very interesting zone put together with, of course, our already existing technical analysis. Obviously, technical analysis should come first, but this is just an interesting put wall that we are seeing here on the SPY. We spent a bit of time on that, so we'll go through some stocks now, but I think it's a pretty important factor to be looking at. We do expect from a TA perspective that if we go lower on Monday, we move towards that 50 exponential moving average on the S&P 500. Let's have a look here at Tesla. So Tesla's close was pretty disappointing, I've got to say. That weekly is a shooting star, pin bar, whatever you want to call it. If we get follow through, obviously it's a bit negative here. We didn't quite reach our lofty heights of 780, 775. Let's take a look at the daily price action here. So you'll notice the daily price action was relatively negative. It moved down low enough for us to now expect it to come at least down to this 20 moving average here. It was around that 726, the previous resistance, and this is around 722. So somewhere around this 722 is where you hope buyers regain control of Tesla. You'll notice a lot of the volume metrics here are all sitting around there. So there's been a lot of buying and selling discussions at this area. Makes sense, of course there would be. So this is going to be the hold point that we hope the bulls can hold. Otherwise, if you're looking for the deeper kind of pullbacks on this particular stock, what you're doing is you're just using our standard trend line that we've been using for quite some time. Basically, there it is. If the market does start to tank for Tesla, it's going to be into these levels. The price action still looks good, but ultimately price action, everything like that on a specific stock, if the market's correcting, there's not much you can do. Let's take a look at the options flow. Overall, the options flow, I think, is relatively positive for the weeks ahead for Tesla. There's huge amounts of puts that have been put in at, I think, 720 for this week expiring, so the 17th of September week. And then, of course, we've got 700 tons of puts being put in. This is positive because it can put walls for this stock. So keep watching Tesla, keep looking at the price action, scroll down to the smaller timeframes. That's going to be the key. Algo flow was negative through the Friday session. We expect that with the price action. Just means Wall Street was realistically doing a very similar thing than what the price action was doing. Let's move over to AMC. So AMC had a good rally. I liked the trade. I talked about it through the live stream. I think you guys did really well if you picked it up around this 48.55. It just tipped, 51? The high of the day was 51.70. We were hoping for around a 52.35. I'm sure some people did close it coming into the weekend, but that was actually a very nice trade. The price action is continuously being good here for AMC. We have a trend line that we can put in place, pull back here, hopefully, then we get long, so that's around that 48, and then 52, of course, 35 is the eventual break we're looking for. Overall, Wall Street was against us on this day. You can see here the algo flow was much more negative than the price action itself. Probably an early warning sign that we wanted to maybe take profit on the Friday and then reassess the week after. But yeah, interesting stuff there. Again, you can get that in the room if you want to. Have a look over here at Apple. Now, this was the big story. We kind of saw it in the price action though. I got to say, guys, you got big brains out there in the community. Well done. Because look at this. Supports, we found that trend line on the 2 hour. We closed below it. We weren't positive. We obviously thought around that 150 and it came down to the 149 through the session. Now, could there be more weakness here in Apple? I don't think Apple's chart is as easy to read as some, but because basically, yes, you've got the 50 exponential. Yes, you've got this chance of it going back down to the 140. Of course, if the market does fall to the 50 exponential, I'd expect it to get somewhere around here. But it's not really a great chart. Like, I would have traded down to this level and then be looking for little lightning bolt movements around to the other way. That's the way that I would be looking at this now. It's a falling knife. We need to see some turnaround on the smaller time frames. What I think is more interesting is probably Microsoft, because if we have a look at Microsoft and we consider what the price action is doing here, this is fairly significant. We've basically got a double top that's confirmed to close below. Remember, a massive stock here in the index. It's not like it's not moving the S&P 500, etc. And more importantly, this is the first daily close underneath the 20 exponential moving average that we have seen the whole time. So even during that that decline that occurred over the August period, that little bit of a blip that happened there for a couple of days, we didn't see Microsoft even suffer. Now we're talking about Microsoft going back down to this 50 exponential moving average around that 289 area. This is 2 at 292.89. That's going to push the SPY into the 50 as well. See how they're synergizing together? That's the type of thing that we're wanting to look for in the markets whenever possible. If we have a look at Apple's flow for the day, that was, of course, very similar to the price itself. Wall Street dumping with the market itself there. And we move over now to the indices. So really, IWM, I'm not really too interested in this. Russell 2000 still stuck within the massive range that we've seen for a while. I think we'll just kind of leave these levels, 220, and then I like that 208 kind of area, 210 area, which has been massive buy pressure before. Again, it will all synergize again with the S&P 500. That's going to be the area we want to look at. Let's have a look at the Nasdaq now. Nasdaq closes underneath our massive range here. This has been range bound. It is technically a crack underneath the range. You'll see that last 1 hour, 2 hours of trade, it came straight down, flew through the 15,520, a very nice support from the previous week. Had a good trade here and some good shorts through the Friday. I hope you guys didn't get too stuck in anything here. We did talk about this being the resistance for the session. And yeah, it came back down. I like it. I think it's an interesting start. Obviously, tech is overall at this stage stronger than the S&P 500 itself. Each round number will remain being one of the most important areas. So we close on the daily 20 exponential moving average. I don't think this is anywhere near as significant as what happened on the S&P 500, where it got underneath the 20. If the SPY goes down, so will the Nasdaq though. So if the Nasdaq comes through here, we may see actually further selling at a quicker rate. I'd be looking at that 15,200 level on the NAS, because that's going to be the 50 exponential moving average where we tend to go to, plus previous resistance. This may be all we get from the dip side. If you're a bull this week, you're hoping it bulls straight away on the Monday and continues the rally up. Remember, the SPY 20 must, or that SPY trend line must be held at all costs. We don't want to be underneath there if you're feeling bullish and feeling frisky with buying the dip here. QQQ, clear as well. Through that range, we talked about how this was neutralized. It's down. And when you get rid of all the moving averages and everything, see how it becomes more clear? This level, this 370, which is the same zone, see how it becomes such a clear level in your mind? You just think, yes, I love that resistance, that structure. It looks beautiful. That would be an area that I'm very, very interested in should it occur. Plus, I'm interested in this level, which is around only, 1.5 points underneath the current price. It's amazing how when you look at what we call naked charts, things become much clearer. Let's move over now to Bitcoin. So we've got a lot to cover. Let's have a look at Bitcoin, 45,166. Here's the weekly. I don't really think much of the weekly, so let's go over to the daily. So daily, again, not too great here. Nothing looking fantastic. We need 47,500 for it to be recovering hard. But where this becomes a little bit more interesting is maybe like a 2 hour or something. So we have here a low that's been formed. We've obviously taken out that first, the dead cat bounce, then the rally down, then the 44,400. Any stops underneath that have probably been taken out now. And if you're looking for strong levels, I think 45.6 with a closure above is clearly a zone the market's worried about here. So for Bitcoin, we're looking at it going up to that level. BTC shorts will continue to be maintained as one of the important things we want to look at. This is still incredibly low, so I'm not really too concerned about the whales being here negatively shorting Bitcoin. And the age-old adage of everything is still, if you've had a hot coin coming into a Bitcoin crash or an Ethereum crash, generally they tend to outperform the rallies of Bitcoin and Ethereum. As Bitcoin and Ethereum stabilize, these hot coins have those buy the dip analogies on them and they move up. Here's, of course, Cardano. But if I showed you any of them, if we had a look at Phantom, if we had a look at Poly, any of these types of things, they've gone up hugely. Or Solana, sorry. Solana over the last couple of days went up hugely, hit past 210, remember, and then people sell and they go, whoa, 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 Bitcoin's still low. Let me take my money over to Bitcoin. So remember, the rallies tend to happen in the hottest stocks or the hottest coins after an initial crash. Then the money floats out of those and goes into what is considered the bargains. This is the tendency of the market. Once you understand that, you do tend to do quite a lot better. I also want to remind anyone that if we do start to see some, red in the streets, just remember that the 6-month target, even though we're on month 7 of glorious gains and SP500 streaks, once that is broken, yes, we could have an extra red month. You can see here the stats are coin flippy kind of for the next month after that month of red. However, 6 months later, we come back. 93% of the time, the market is up an average of 8%. So buy the dip does still work. It's just, where do you want to buy the dip? And of course, how good is the company that you're looking at? Just remember that and keep it in the back of your mind. Big news this week, CPI is coming out Tuesday. That may shock the markets as well. Expectation here is 0.4%. Previous was 0.5. Let's see what happens with core CPI and CPI. That's for the US economy. And then the other big bit of news that I think is most important, other than retail sales, and of course core retail sales coming out on Thursday, is going to be the quad witching event that's happening on Friday. So be careful of the quad witching. Weird things happen on that day. We'll be live streaming 1 hour before the US Open every single day. Remember to subscribe if you enjoyed this video, and of course smash that like button, guys, if you do enjoy the content. We'll see you on Monday, guys. I am keen. It's going to get good. I can feel it. Bye for now.